Hi everyone, no news today, so let's get straight into the data as well as the charts. Then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Starting off with fear and greed, you can see we jumped up to a 73, pretty high actually, considering that markets were down a little bit on the day. So previous close was 66. A week ago we were at 75, so 73, pretty high, and we can see that here on the timeline continues to trend up a little bit towards that 75 range, which is pretty high like I mentioned. And then market momentum, extreme greed, strength and breadth continue to sit in regular greed, and you can see breadth continuing to taper off there a little bit. We talked about that in the Sunday video. Put call ratio still in extreme greed, volatility hanging in at neutral. Safe haven demand, extreme greed, and then junk bond demand has moved into greed, which is interesting. We were in extreme fear for the Friday session and in the Sunday video, but now we are back into greed, so a little bit of that fear coming out of markets now that we're done with the Fed and most of the major earnings. Moving over to seasonality, you can see we're expected to be generally flat through this period. You have the 5th here, which was a slight bit higher from the 2nd, basically flat over the next few days. And then there's a little bit of a spike potentially towards the 12th and 13th, and then we're generally flat for the rest of the month, and then somewhat bearish here for the Dow and the SPY, whereas the Russell and the NASDAQ continue to outperform for the rest of the month. Moving over to the calendars, you can see the 5th was expected to be a bearish day, and sure enough, we got a bearish day. Tomorrow, more bullish. Wednesday, no data. Thursday, a little bit more bullish. Friday, flat again, so that flatter price action like I was talking about. And then bullishness, 13, 14, 15 into the options expiration, and then it's all bearish after that. So right now, still a neutral to bullish time period for seasonality. Moving over to earnings, you have McDonald's beating on the bottom line, missing on the top. Caterpillar beating on both. Simon Property beating on both. Interesting to see that malls are still doing okay. And then Estee Lauder beating on both. Tyson Foods missing on the top line. Overall, not bad. And then tomorrow you have Eli Lilly, AMZN, those healthcare names coming through. Ford Motor, always fairly interesting. And then looking at Wednesday, you have Walt Disney, Uber, CVS, PayPal, O'Reilly, Hilton, as well as Allstate and Yum Brands, with the heavy hitter obviously being Disney after hours tomorrow. Moving over to the economic calendar, you had U.S. Global Services PMI, 52.5, a little bit lower than expectations, but still above the 50 line, so we're still showing a little bit of growth, as well as non-manufacturing PMI better than expectations, well above the 50 line, so that continues to look good. And then tomorrow you have the 3-year note auction, continuing to watch those interest rates. And then looking at Wednesday, really just the 10-year note auction, fairly interesting. Nothing major for Wednesday. Moving over to Max Payne, we talked about it in the Sunday video. This looks quite a bit more bearish than it has recently. Look how many calls you have at 393. And look where we finished. This is the Friday expiration, so you still have a whole week to close below that level, but it does seem like we are likely to close below that level, indicating that we should be a little bit more bearish this week. Total options, just under 1 million. Put call ratio, 2.16. And then you have a ton of calls sitting out there at 515. Obviously, I don't expect to get anywhere near that, but clearly there are some big players selling some upside, trying to bring in some income this week, because it does seem like this upside potential is starting to dwindle across markets. Moving over to the charts, starting off with the S&Ps, you can see we did end up dipping pretty hard all the way down to 490.85, rallied back up to 493.96, almost 494, and then kind of fell into the end of the session, finished around 492.44. Momentum on the hourly chart, slightly bearish, still holding between these two levels, so no change in terms of area. This is a pretty wide zone because we have been at all-time highs, so in terms of levels, there's not much in here. Let's go ahead and add one at this previous consolidation top. Gives you almost 1% between those two levels. So tested that, broke it, and then rallied back above it and are holding now. So 491.56 up to 495.73 in terms of levels to work with for now. And then looking at the structure, you can see we're still in this channel. We are in the lower portion, and we are finding a little bit of resistance at that midpoint, which is interesting. Definitely showing a little bit of weakness off of that level. There's also some longer term trend lines in that same area. You can see from these previous tops in the same area where we have broken down from before, which is part of the reason I think we're probably topped out for this move. It's been a long move. It's been very bullish for a while, but we're definitely showing some signs of weakness. Moving over to the NASDAQ, similar thesis here. You can see sideways price action, dipped low, touched this trend line here, held that level, rallied back up to resistance at 428.53. Momentum still bearish, RSI still bearish here on the hourly charts. Right on top of my level. Didn't quite touch my next one at 424.75. And you can see it here on the trend. The trend is still bullish, but we're definitely finding some resistance at the trend lines here. You notice in these last two tops, we had consolidation at this trend, hit that same trend again, broke down, got very close to it, didn't quite get there. And you can see we're definitely leaving some area. We're not topping out at that trend line. We're starting to level off here. And again, that is showing me that we're seeing a little bit of loss of momentum in terms of bullish price action. So right now, consolidation, sideways chop, hanging in there to see if we can break higher, take out these highs and go up to that trend line, or if we break down from here, looking for that consolidation of hourly EMAs and SMAs, and then a structural break. Moving over to the Russell and the Dow. The Russell fell off today. It continues in this short-term downtrend, and it has taken out all the EMAs and SMAs on the 4-hour chart. Let's look at it on the daily. Hit that 55 EMA, held it at least at this point. And we did end up finishing just above my level, 191.89. And then after hours, you can see we have dropped a little bit below it, 191.77. So momentum, slightly bearish on the daily chart, and then it's definitely bearish here on the 4-hour chart. Next level for me, 189, and then looking at the Dow, similar thesis. This is obviously still an uptrend. We're still holding those higher highs and higher lows right here. We need to hold right here. Otherwise, your next low is 381.38. If that structure breaks, then you're looking down to 379.35. Momentum slightly bearish here as well, but structurally different. Moving over to Apple and Tesla. Apple held up today, almost 1% on the day, gapped up, dojied. So it got back above 186.88. Talked about testing that level on the Friday session, dipped into that level, tested these trend lines and ended up holding. It is up a little bit more after hours. Let's look at it on the 4-hour chart. So this looks okay. We're above the 9 in VWAP, got above the 21, looking for a back test here. If that structure holds, then you can look for a bigger push up, potentially to 194. That would be interesting. Right now, momentum slightly bullish. Let's look at that on the hourly chart as well. So on the hourly, you already have a pretty good setup. So we broke these levels, tested the 55, tested the trend line, and then rallied up. You're still in a consolidation because you're above the 921 and 55s, but you're still below that 144 and 200. So 190, definitely an interesting level in consolidation, but it is showing signs of strength. And then looking at Tesla, abysmal on the day, 3.65% to the downside. At one point, it was all the way down into the 175 range. Let's look at that on the 4-hour chart. You can see it got all the way down to 177.70, tested that level, and then bounced a little bit. So you can see once this structure broke, got below the EMAs, tested that level, broke down, and now we're here. So structurally bearish, momentum bearish, RSI bearish. We talked about how it was kind of consolidating and that it could break higher to this level, but it didn't do it. Once this level broke on Friday, tried to hold it, couldn't do it in the pre-market, and then fell straight down to that next level. So this is bearish now. You have a lower low. Tesla looking weak. Next level, 167.34. Moving over to semis, AMD and NVDA. AMD was actually down 1.39 on the session. Held the trend, so it's still consolidation here. We're not at higher highs. We're in this lower high here, but we're still holding above this previous low, consolidation, waiting to see what happens. NVIDIA, on the other hand, has no chill, 4.79 to the upside, massive run. Again, gapped through the trend line, tested it, and then rallied, and it's up even more after hours. Let's look at it on the 4-hour chart. Just continues to go straight up. Momentum bullish, super overbought. Everything's super strong here on NVIDIA. Just continues to go higher every single day. Moving over to Amazon and Meta, the two stocks that propped up the markets last week. You can see Amazon continues that kind of slide that it had on Friday. Still holding up most of the gains, but it is below the 9 EMA. VWAP sitting down at 168.71. Support down at 167.06. And then let's look at that on the daily chart. You can see obviously it had been grinding higher for a while, and then you had the massive gap up, and we're kind of waiting to see what happens here. Still on the day down 0.87, so not terrible. Momentum bullish, volume obviously starting to drop off there. Probably a little bit of profit taking, and then similarly here on Meta, you can see continues that little bit of downward price action that we saw towards the end of the session on Friday. Moved lower here today. Obviously still maintaining most of the gains. We're up around 459, which is pretty massive considering that we started on Thursday down around that 395 level. So momentum starting to fade. RSI probably going to break down a little bit here. Again, just look at the size of that massive run. It had been rallying super aggressive, got up to that trend line, broke back below it here, so we'll see what happens now. Probably some profit taking. Again, it was a massive move. Even though the earnings was super good and they announced a dividend and buybacks and all of the things that you would want to hear as an investor, it just seems a little bit rich now. And it's going to be interesting to see if these two stocks can maintain the gains that they got off of their earnings pop. Moving over to staples and discretionary, you can see staples did drop down a little bit, 0.62. It's back below 74, so that's interesting. We got above it on Thursday, held it on Friday, inside candle, and now we fell back down to trend. We're down a little bit more after hours. Momentum starting to fade there a little bit. Let's look at it on the hourly. You can see we are right at that level. Looks like a bit of a double top. Got there pre-market on Friday, tested it at the end of the session, couldn't get above it, and then sold off into the pre-market today. So critical level, if this breaks, then you're looking down to that 72.50 area, as well as the 200 SMA at 72.68. And then looking at discretionaries, also went lower on the day, 0.41, after having a really strong Friday, obviously on the back of the earnings that we just talked about. Still held the level, 174.76. After testing that trend down here at 173.07, momentum still technically a little bit bullish. Let's look at it on the hourly chart. Dipped into that 200 SMA, 144 EMA on the hourly charts, held that level. Still well below the 21. This does kind of look like it's setting up for some bearishness. So we broke really aggressive. Look for a retest of the 21 around 175.80. If that 21 holds and we break back down from that level, that's going to be quite bearish. This RSI does look a little bit weak as well. So these look a little bit weaker than they did last week, with staples holding up a little bit better, down 0.62 versus the 1.41 that we saw on discretionaries. Moving over to oil and gas and utilities, we see oil and gas getting a triple test of this area. So we had an initial test back in December, tested it again in January, bounced higher, got another test here, got another doji. So there's clearly some buying pressure in this area. It's going to be interesting to see if this holds. It does seem like a pretty good opportunity, looking for a push back up to 135.07 from this area. Momentum not quite supporting it yet in terms of a thesis. Let's look at it on the hourly chart. You can see dipped into that area quickly, rallied up, hit the 21, and then sold off. So you want to see that 9 hold sitting at 129.71, start to see this structural change. Right now, it's still a downtrend on all of the charts. So keep that in mind, just a potential setup here. And then looking at utilities, massive drop on the day, 2% down, rallied up, hit that 21 EMA on Thursday, fell off, tested the 9, gapped through it. Now we're down here at $60. Utilities had a pretty decent run, down from around 55 all the way up to 66. Utilities obviously doesn't move very much, but that was a strong run there. And since then, we've fallen off about 10%. So could be an opportunity. Would need to see that 59.95 level hold. Momentum bearish, RSI bearish. If this breaks down, your next level is 58.34, and then below that I have 56.89. Moving over to breadth. Breadth sold off a lot on both charts here for the 20 and the 50. You can see we were down on Friday. Another really strong down day, really strong down close as well. Momentum rolling over. So seems like we're not going to get back into that 86 area. Thought we could have seen some follow through from the Thursday session. We would have needed to hold this trend here at 56. Couldn't quite do it. Fell through both of those levels. Now you're looking at 36.60, potentially a lower low from this previous low at 28. And then that would put you down to potentially 16 on the 20-day average. That would be quite bearish. And then looking at the 50-day average, continues to waterfall off. You saw it here, kind of a bear flag setup, broke down, hit the 200 SMA as well as the 144, momentum bearish, RSI also bearish, almost oversold there at 32.45, but definitely broken out of this 92 area. It is interesting to see that markets have still held up quite well with breadth falling down at this point. The Russell obviously falling off, but in terms of the SPY and the NASDAQ, they're still holding up quite well as breadth continues to fall here in the short term. Moving over to yields. Yields continue to rally super aggressive. So we saw a massive pop on Friday. I was pretty surprised to see that they sold off after the FOMC, and then we got the jobs data, and that was super bullish for yields. levels, and we now saw both of them continue above key levels. 2-year getting above my level here at 4.4 in this zone, back up to 4.47, almost above 4.5, and then the 10-year having an even stronger day, 3.38% to the upside on the yield, pushing us back to 4.16. Next level of resistance up around 4.28 or 4.32, depending on what you're looking at. Let's go ahead and extend out these trend lines. We are back within this trend that I was watching, so we have some trends in there as well, but realistically watching that 144 EMA sitting out at 1.42 as my next key resistance. Moving over to the dollar, this rally continues. We saw a massive rally on Friday. We talked about it in the Friday video, looked super strong, closed right on its high, well above all of these wicks and the 144 EMA. Super strong on the jobs data, momentum bullish, RSI bullish. We got another continuation, closed above my level here at 104.4. You can see we're finding some support in that area. If it breaks here, might see the 21 EMA, but at this point I expect this to go higher. Next level to the upside, 105.50. And as the dollar continues to find strength, I would expect equities to find at least a little bit of weakness. Let's go ahead and extend out these trend lines, see if we can find some resistance areas. So in terms of short-term resistance, 104.78 potentially could be an area of some resistance, but I would be looking for 105.50 at this point. Moving over to bonds, as you would suspect, these continued lower as yields continue to rocket higher on that jobs data. J&K falling 0.48, hit the 55 EMA, so we'll see if that holds here on the daily chart. That is trading at 93.82, ended up closing at 94. So it's right in this previous consolidation. Realistically, this is just sideways chop at this point. I thought we were kind of wedging in and then we overthrew it to this previous high. So realistically, this is more of a consolidation at this point where you have some tops as well as some bottoms. Didn't quite get all the way to the level at this point, but we're back here now from this previous level. So 93.68, that's the deeper level, short-term one here at 93.83. And then looking at TLT, this has been quite the move. TLT has been really volatile with interest rates, and you can see it here. So we had a really strong rally up to that 100, dipped low to that 144 EMA, consolidation of EMAs, popped out of it into the jobs data, and then fell super aggressive Friday and now Monday. Momentum bearish. You have trend support sitting here at 93.82. That should be interesting. We're back in the highly traded zone, but realistically, I expect yields to go higher, which means this consolidation should break. And then below that, there's not really a ton of levels. Next, I would expect maybe down around 89 seems interesting. Let's go ahead and add some levels here. There at 89.16 seems interesting. That's probably where I'd be looking after this most recent dip low. Let's go ahead and add a level at that level as well. Right there at 92.82, just barely below this low, right at this gap down going back to September of 23. So critical levels 92.82, and then 89 would be my next one. Moving over to the VIX, move index didn't really do anything, not worth talking about, but looking at the VIX here, you can see we did gap higher again. So we're still holding this structure. We did fall down to the 9 EMA, still holding that level, didn't quite test the trend line, so that's a little bit bullish on volatility as well. Everything does look a little bit bearish. It is worth noting that the RSI just barely got below the SMA there at 51.99, getting below that 52.25 level. So momentum slightly bearish, RSI slightly bearish, but in terms of structure, still looks bullish. Moving over to my accounts, I ended up positive on the day, made a little bit of money. The NASDAQ was not down very much, and I just held all of my positions. Still pretty deep in the money on both of these NASDAQ positions. IWM, I did make an adjustment. I rolled down to 189 for 32 days from now, so I rolled down and in. It did bounce a little bit from the level that I did roll in from, and you can see I'm down about $86 on that call, but max profit on this position is now down around 195. So I still have some upside potential if it decides to rally, but looking at the Russell charts, they do look quite bearish at the moment. So I am trying to be a little bit more cautious there, but still giving myself some opportunity. And then, like I said, Q's positions, TQQ's positions, didn't make any changes there as they did not fall very much. And I was able to bring in some profits on those call positions while the share position stayed generally flat. Overall, not bad, just a small adjustment there on the IWM. We'll see how that holds. If it starts to rally aggressively, I can always adjust back out, but I was able to roll down and in for a credit. And now I only have 32 days to expiration, so it gives me a little bit more room to work with. Let me know down in the comment section what you thought of the markets today. Are we done with the earnings and news hangover? We're starting to see a little bit of excitement fall out of markets and some weaker price action, or is this just a short-term dip? Buy the dips and look for higher highs. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.